In India's aviation sector, the demand outlook is incredibly strong. And as a result, we are seeing a surge in interest from various players to order new aircraft and expand their capacities. A recent example that grabbed headlines was Air India, which made waves by placing the largest ever aircraft order in the global aviation market. And now we have another groundbreaking development in the aviation industry. Just yesterday, IndiGo, one of the major players in the Indian market, made a monumental announcement. They placed a mega aircraft order for 500 Airbus family planes, setting a new record as the largest ever order placed by an airline in one go anywhere in the world. Now, to put things into perspective, IndiGo already operates a fleet of over 300 aircraft and has previous orders totaling 480. Now, with this recent order, their order book is now filled with almost 1,000 aircraft that are yet to be delivered. Now, this signifies the scale of growth and ambition in the Indian aviation sector. Now, speaking of industry growth, the future of the Indian aviation sector looks bright. With India's growing economy and booming population, there is an expected increase in demand for air travel in the coming years. Now, this positive outlook has led aviation companies to eagerly capitalize on the opportunities presented to them. However, it's worth noting that this growing competition could potentially lead to increased rivalry among airline players. When considering the market share of Indian airlines, IndiGo currently holds the highest market share at 55.7%, and this is followed by Air India, Vistara, and Go First. But what's even more fascinating is the performance of some other airlines. For instance, Akasa Air, a relatively new player in the market, has gained a market share of 300 basis points. Now, with intense competition brewing up in the sky, it will be interesting to see how the Indian aviation industry evolves and adapts to these changes in the future. Imagine owning a piece of gold but without the hassle of storing and safeguarding it. Imagine taking exposure to gold in a tax-efficient way and also earning a guaranteed interest over and above the appreciation of gold. Well, that's where sovereign gold bonds comes into the picture, offering a unique investment opportunity. Sovereign gold bonds are government securities denominated in grams of gold, acting as a modern-day alternative to holding physical gold. Now, these bonds are issued by the Reserve Bank of India on behalf of the Government of India. Now, since they're backed by the Government of India, it makes them very safe and reliable. Now, let's talk about the latest issue of sovereign gold bonds. Now, the subscription for this tranche opened on June 19, which was yesterday, and this will remain open until June 23rd. Now, the settlement date for this tranche is on June 27th. The issue price of these bonds has been fixed at Rs 5,876 per gram of gold. However, if you choose to purchase these bonds online, you can also avail a discount of Rs 50 per gram. Now that we've gotten the details in place, let's talk about what sets sovereign gold bonds apart from other forms of gold investments. Number one, they offer a guaranteed 2.5 interest rate per each year in addition to the appreciation of the price of gold. Now, when it's a win-win situation, as you not only benefit from the rising value of gold, but also earn a guaranteed interest above that. However, this interest earned is taxed. Another significant advantage of investing in SGBs is the tax efficiency they offer. Now, if you keep your investments in SGBs for a duration of 8 years, you won't have to pay any capital gains tax when you sell them. However, if you were to sell your sovereign gold bonds on the secondary market before it matures, you would be subject to a 20% capital gains tax. So it's wise to consider the long-term benefits of holding onto your SGBs. I must mention one downside though. In the first 5 years, liquidity may be a concern, as there may not be many buyers on the stock exchange for your SGBs. However, this problem disappears from the 6th year onwards because you can easily encash your SGBs directly from the Reserve Bank of India. Now, these are the features of the sovereign gold bond open for subscription from June 19th to June 23rd. Having said that, this is me, Merlin Sadana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.